Welcome trader to my weekly Forex recap brought to you by Admiral Markets. My name is Chris and today's focus as always on these four currency pairs. First of all, be aware though that this video is shown to a global audience, yet may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence and contact an appropriate entity for more info on that. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. Plus, by continuing watching this video, you agree with this disclaimer and you're aware of the risk involved when trading. Alright, I wanted to start with the AUDUSD 4-hour chart. Of course, we see a pretty strong momentum here in the past. Last week actually a three-wave correction to the downside here in ABC, bearish correction, and price got back down to the 78.6 fib, which has been actually giving a bounce, and you can see a response to that fib and price rallying to the upside. So for me at this moment, I think that could be an interesting potential for a trade as a continuation to the upside. We already see a bullish bounce at the 78.6 fib. So I think there's a chance of continuation, especially if this 4-hour candle closes anything bullish like this. For instance, if the close is near the high so that the bulls remain in control, I think that, and the 8 EMA turns up, I think that is an interesting potential there for a signal that price might make a rally here and continue with that uptrend we already had. So we have an uptrend, right? We have an ABC correction, and this could be the signal of continuation. Now, one thing has to be noted though is that there's a resistance trend line here, and there's also potential resistance about here, I would say, with these tops somewhere in here. So that's the level to be careful of. When price reaches that level, if it does, of course, then that could be a bearish bouncing spot as well. So I'm going to trail stop the 4-hour candle lows, at least these strong candles with the decent size, because if price does turn here, I don't want to get caught. What could happen is a bearish turn could send us all the way back down to the bigger support trend line, the green one here, and there could be a bigger correction. This could only be one part of the correction. This could be second, and we could get a third one way deeper. All right. Now the alternative is if price manages to get above the resistance trend line, then we could have a breakout and continuation. That's the positive scenario. So let's see how price responds to that resistance zone. The targets, 77.50, minus 272 target, perhaps even 78.40 at the minus 61.8 target. So that's the upside scenario. The downside could be around that 73.10 area where I have 138.2 fib, but also the trend line. That would be a breakout to the downside if price pushes through the purple support trend line. So yeah, that's basically what I'm looking at. Break here, potential bounce or break spot up in here, like this. And at this moment, it seems like with a good 4-hour candle like that there's a good chance of continuation up to at least the resistance. All right, moving on to, for instance, the dollar yen. We can see that price is in a very, very interesting spot because it has retraced very deeply. It's challenging, actually, the top, the origin of the swing high, swing low that I've been using last week as well. And, well, it's getting close to breaking that, but not yet, actually. So, will it break or not? If it doesn't, that could still be a very deep retracement, and it could be a turning spot for downside. If it does break above this level, well, then my bearish analysis is at least temporarily on the side, and I'm cautious at this moment and will be neutral and have to see what's going on. If it doesn't break this top, then it still looks bearish to me. We had a triangle here, of course. We got the break of that triangle, and this could all still be a pullback for more downside. So from that point of view, it looks actually like price is in a channel like this. So let me draw those lines so you can see that pretty neatly. And when we dive into the hourly chart, you can see that if this support trend line gets broken, then the channel is breaking and there could be a breakout and continuation to the downside. All right, so that's one scenario, of course. Now, if it breaks above this resistance level, I'm going to be cautious. It could still be bearish, but I'm still cautious at that moment. That's my validation level, and obviously there's still a lot of resistance points above it as well, so I would not go long, but I would be careful with going short as well. As long as it stays below 113.80, I am more bearish at this moment, especially if it breaks this channel. And the target, once it does break the channel, could be 108, 110, first of all, psychological round level, 109.80, 108.70, 107.50. We got great webinars, of course, lined up this week. Hope to see you in Tuesday, Wednesday, live webinars on price action and fibs, looking at FX trading on Tuesday, strategy on Wednesday evening and Thursday evening. We got wide trade crosses and understanding the flow of price, looking at the communication and what it basically tells us, looking at the language, basically, of price action. Then next week, Monday, of course, Nenad is back with his usual weekly FX recap. All right, next on the list is this euro dollar, looking at basically a long consolidation here. Price going just sideways at the 38.2 fib. You can see that's indicated by these pink lines. So is that going to be a bounce to the upside at that fib? We're going to see maybe a rally and a continuation, or is it just a sideways zone and might we see just one more break actually below it as a continuation of this correction down to the 50 fib, after which I would expect a bouncing spot at that level, 110.80. So that's the question that remains to be seen. I'm going to keep an eye on the purple and the pink line. If it breaks above the pink line, then I think there's a good chance of a breakout to the upside. If it breaks below the purple, probably a breakout down to the 50 fib, but I'm more interested actually, especially interested in looking for a bounce at the 50 or a break to the upside. All right, so at the moment I'm more bearish due to the overall more tendency here to go up, and we can see that there could be an upside correction perhaps to the target at 114.80, 114.50ish, minus 272 target for the euro dollar. That could be something that could happen. That level might be a very strong bearish zone because we're still in this massive orange resistance zone, and that could be a turning spot then again for downside. All right, pound USD, basically price did show a very, very strong momentum to the downside here, but we're maybe seeing some kind of ABC zigzag. So I would expect price to potentially get up to the minus 61.8, around 142.50. That could still be an interesting turning spot for downside. Now the pound USD is not really a favorite pair of mine at the moment, just because it's quite choppy. I mean, if we look at price action here, you can see clearly that there's a lot of momentum in both sides, really. So it's difficult to say if this could be still one more bouncing spot to get one of those momentums like this and get it again, or is this just going to be a correction for more downside? You know, I really don't have any particular favorite at this moment. I think both are possible. So I'm really going to be cautious, to be honest. And I think that I'll tell more in the webinar on Tuesday, Wednesday, depending on how price action develops. In theory, though, if price does show struggle at the 61.8 target, it could be a moment where price might continue. Now, if it hits that target and just goes flat and sideways, you know, it could break tomorrow and continue easily as well further higher. So it's one of those pairs that's pretty difficult to get a read on, and I think I'm just going to keep an eye on this throughout the week and make a new analysis as I get more information on the pound USD. So I hope to see you in those webinars in the upcoming week and next week. And of course, hope to see you also on the website at onemarkets.com. We got a lot of analysis on fundamentals, waves, and technicals. So hope to see you on there. And of course, you can check that out through social media as well. Cheers and good trading.